Good morning, everyone, and welcome to the Stealth Trader Thursday morning pre-market analysis and trade plan setup. It is September the 18th, and my name is Doug McKay. You can find me on a Skype chat room that we've had for the last 5 years. We're now getting ready to just port that over to the Stealth Trader website. If you want more information, you can send a email to me. My email is d.mckay@stealthtrader.com. Each morning we come together and I go through my morning analysis, the structure of the market, look at the trends macro to micro, and then get into some more in-depth analysis and look at my hypotheses for the day and where my trade levels and targets are going to be. Before we get started, I have to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves a risk of loss. Please consider carefully whether futures or options are appropriate to a financial situation. Only risk capital should be used when trading futures or options. Investors can lose more than initial investment. Nobody at Stealth Trader is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see are for education purposes only. Please trade your own plan and do your own due diligence. Okay, so let's just go and do a quick review from yesterday. Let me bring up my ES charts here. Again, I'm running a little bit late. Oops. So yesterday we were talking about that we had a adjusted all-time high in the RTH that adjusted from 2010 down to 2003. And our main target above our all-time adjusted high was adjusted down from 2011 to 2003. We had an RTH high that adjusted from 2010 down to 2002. And our two main targets above yesterday was the 2002 and 2003. Our main hypothesis was we were going to trade sideways and wait for the Fed announcement. We have a rotational day until we get the Fed announcement, and then we would get some type of a move. And we actually looked at the Ferrari Fed trade, and that played out real well. And then, of course, with the news, we went up and we adjusted that high and put in a new all-time adjusted high at 2003. And we did one tick, and then we rotated down from it. Now, you can see that on the spike here, we did have this spike here. We did have a mystique just before going up and making the all-time high, and then we rotated back down into the balance from yesterday, and we actually closed basically just inside of value and just inside a range from Tuesday. We still have that 2011 sitting up there, and it's still my hypothesis that 2011, even though it's the unadjusted all-time high, gets taken out at some point or another. We're trading just below 2,000 right now at, well, we're trading right at 2,000 now. So we're going to be opening, if we open in this area, we're going to be opening outside of value, but inside of range from yesterday. And I'll get into what my main hypothesis is going to be for the day, but let's start with what we always start with and take a look at the different trends and the different time frames. You can see on the monthly, there's that 2011 put in the beginning of this month. We've got great slope and separation on the 9 EMA and the 20 SMA. The trend is very much intact on the monthly. On the weekly, we came down and closed out this technical gap that we've talked about for the last couple of weeks, and we tested the 9 EMA, and then we bounced off of it, and we're coming up to test the month high from last month at 2,675. I'm sorry, from last week at 2,675. We've got slope and separation again on the weekly, so this the trend itself is remains intact on the weekly. On the daily, same thing. We came down, we had that delta gap from the rollover, an 8-point delta between the September and the December contract, came up, closed the gap, tested the 9 and the 20, got above the 20 yesterday, and now we're trading above it. We don't have a lot of slope and separation yet, but we do have a bit of a trend starting here, or a continuation of this trend after coming down with the delta rollover. Going over to the geometric chart, we are watching this downward sloping fork and the lower line of the long-term upward sloping fork, and that was one of the areas we were talking about yesterday, is coming up if we held above the upper line of the downward sloping fork to look for a move to test that lower line of the upward sloping long-term fork. We're now inside of it. The key here today is going to be whether or not we hold above that. I'll be watching this 1996 area. Of course, if we made a strong move today, I don't anticipate that we'll make this big a move, but a move up to test the upper line of the intermediate upward sloping fork would take us all the way up to 2030. I'm not anticipating that, but the key is we've bounced off the center line of the intermediate upward sloping fork, broke out of the downward sloping fork, and got inside of the long-term fork. This leads me to believe that we've got more upside potential and a move to take out this 2011 and a measured move upwards in that 230 to 250 area, depending on when we hit it. So just keep an eye on that 1996. If we do get below the 1996, move down to test the upper line of the downward sloping fork would take us down into the 1987 area. And we have a 1987.50 CHVN that we talked about the possibility of playing ping pong between that 1992 and 1987.50 yesterday. We'll take a look at that on the composite in a minute. We do have a energy point down here at 1978.25. Again, this downward slope has been violated. We've broken out of it, so I'm not sure how much longer. This was drawn on the 4-hour, and I like the frequency that we had with this fork. Just we've broken out of it. Now I have to start looking at the possibility of readjusting the downward sloping fork. But the key levels for today from the geometrics is the 1996.50 area and the 1986 area, 86, 87 area. Those are the two areas that I would look at possibility. Going over and taking a look at the intraday trends inside of the intraday. No, we don't want the 4-hour. Sorry. You can see that we went down yesterday, and we took out that naked. I consider this to be closed. We missed it by a couple ticks, but I consider that to be closed out now. And now the trend we've got back above the 9. We've got great slope and separation, and prices paralleling the 9. A little bit of a technical gap here, but not something that I would worry about. I look to see that gap closed on the 4-hour in around that 1996 area and that lower line of the long-term upward sloping fork. Going over to the 30-minute, beautiful example of a technical gap on the 9 EMA. Mr. Sneaky, not quite a FUBAR. There wasn't enough volume coming in, not enough selling wick, but good example of a technical gap, Mr. Sneaky, and we just come down and closed the gap. Tried to break below the 9 EMA, and we're currently trading right at it right now at basically 1999.75. Losing a little bit of slope, a little bit of separation, but so far the trend is intact on the 30-minute. Going down to the 5-minute, a little bit of a different story. We've got a bit of a rollover, and now we've got a bit of a downtrend on the 5-minute. And we're just trading just above the 9 EMA right now. Likely end up on the 5-minute getting an MA hug here, and I imagine it's going to be somewhere in around that 2,000. So a little bit of a start of a downward trend on the 5-minute, but everything else still looks pretty strong and pretty positive. Let's take a quick look at the news, and then we'll get into the longer time frame. Of course, we just had unemployment claims. They came in much better than expected. We had building permits. Not sure. I haven't checked the news. I was just listening to the CNBC. The big one is going to be here, and actually she's going to be speaking right now at 8:45 with Fed Chair Yellen speaking. And then the other big news is going to be at 10 a.m. Eastern with the Philly Fed. So just keep an eye on headline risk right now, and then the Philly Fed at 10. So let's take a look at the big picture, and we'll start looking at our analysis. I'm going to move the profile to include up until yesterday. I'm not going to add yesterday's profile in yet because I want to see where they stepped in to find value at 1977.25, and this to me is almost a breakout candle. But what I want to do is I want to see where you can see that we have that low down at 69. So I'm going to take a profile, and I'm going to draw a profile, throughout this whole range. When we broke out, we came up, we had the gap up. I'm going to put profile right through to yesterday, and you can see that most traded price and the micro composite VPOC. Wait a minute, didn't go all the way, did it? Yeah, it did. Is bring this to the front so you can see it. Oops, wrong. You can see that the most traded price is that 1992, and then below that, okay, from the balance going from the 25th through to where we fell out of balance last week to the 9th, we had a VPOC down here at 87.50, and that was why I was thinking that we'd get some ping pong, and we certainly went down. Tested that area, tested inside of the value area low from that balance, and then peaked down, tested the 83.50 CLVN, and then popped back up after they found buyers, and we're currently now above the value area of all of these profiles. So we're not at a range yet, but we are in price discovery, and I anticipate a move to test this 2003. That 1996, remember we were talking about that on the geometric chart. If we get below that 96, we're getting back into longer term balance or longer term value, and I'd be looking for a move down to test this 83 and back into the 92 area. Close the gap and come down and test the microcomposite VPOC that is at 92. Just above it at 93.75, we've got yesterday's naked VPOC. So once we're back in this area, if we do get back inside of value, I'm anticipating playing ping pong between the 87.75, 87.50, and this 92. I'm not expecting much. We do have some serious wicks. I mean, we've got a doji day from the RTH session yesterday. We could get stuck in this upper wick as we chop around just outside of value, or we could come down here, play ping pong, and chop around and get stuck in the lower wick. So just be aware of where your levels are today. Let's go take a look at the overnight, and then we'll start moving our numbers over to our intraday chart. So overnight, we went back up again, didn't quite get up to the 2003.25, but we have an overnight high at 2002.75 and an overnight low all the way down at that 93. And you can see that both on the Russell and on the ES, when we moved down, we picked up buyers down there with a VPOC down there. I'm not anticipating a VPOC shift. We could get it if we get up here at 2001. We still have, basically 25 minutes to do that. We'll just have to keep an eye on it. But I'm not anticipating that we'll get a VPOC shift from the 1994. So the overnight VPOC is down here at 1994, basically just on top of the VPOC from yesterday. So let's get rid of this and take a look at what I would be doing in terms of trading this. Now, you could trade off of the 2000 and the centennial number, but that number hasn't been holding very well. We've been up and around it. Many times. So really, the level that I would be trading off of would be this 1998.25, which is the value area high. So that would be the trade area. And then, as long as we hold above that 1998.25, I'd be looking for them to come out and take out the overnight high, make a new all-time adjusted high above the 2003.25. I'm going to use that as a range breakout, and above there I'm looking for a move to the 2005.50 as my first target. But of course, I'm really looking for a move up into this 2011 and the adjustment of the all-time high. We still have measured moves to 2017 and 2023, and now we have one up here at 2032. 32.25. Why won't you draw for me? Come on. There we go. And here's my advice to you. Now, I wouldn't even look, if we get above range and we don't see a responsive seller stepping in at 2005.50, to me, you just don't want to fade this market with a move up, because I think that we'll get a slow grind up to that 2010, and all the risk shifts to the upside. So until we get below 2003, if we do get a breakout, just be really careful, because you're trying to fade a move to all-time highs, and it's always dangerous to do that. I would wait for the safer trade and wait for the break back into structure and take the short. The first target below, if we do break out and we come back inside, will be this 2000. I would even use 2075, but I'm not going to make it a target, right now, unless we come down to test this 1998. So I'm just going to put it in there so that you have it, but it's not something I'm not going to enter. I wouldn't enter a trade in this area between 2003.25 and 1998.25, because I don't think there's enough of an edge. Now, if you're an experienced trader and you want to trade off that 2000, you can do that. There is a little bit of an LVN right there, but I don't think it's a big enough edge, and you've got to be pretty disciplined and pretty nimble to try to catch the trade on the open there. Now, if we break below the 1998, the first target below is going to be this 1996. That's the lower line of the longer-term upward sloping fork, and it's also the value area high from the balance going back through to 819 through to yesterday. So my first target below is going to be 1996. And of course, once we're inside a value and inside a range, I'm really looking for a continuation back towards the MC VPOC, microcomposite VPOC, with a takeout of all those targets in between, the overnight VPOC, the naked VPOC from yesterday, you've got the midpoint, you've got the overnight low, and then just below that, you've got the value area low at 1991.75. So lots of confluence in this area. And that's where I'd be looking for a possibility of a break below value or responsive buyers stepping in and a rotation back up. But if we do break out of the 1992 and the 1991 value area low. Our naked close is there as well, by the way. The naked close is 1993.75. But if we break below value, then I'd be looking for a move down to this 1987.50, and that's going to be my first target below value inside a range. And then if we don't hold the 87, we could come down. The first target I'd be looking for below that is the value area low from this balance area that we were in for a couple weeks there at 85.75. And then with the continuation and the big number today where we need to hold to keep us in this upper distribution area is going to be that CLVN at 83.50, but because the range low from yesterday is 82.25, I'm going to use 83.25. And then if we do get below there, all the same targets that we were looking at yesterday remain the same. We've got 74.25, the 71.25, 67.25. Those were those two distribution areas from prior. Even though it's been shifted down to 63.25 and 59.25, market has memory, so I'm going to keep them as targets below. And then at 63.50 is going to be just adjusted down here to the 63.25, and then of course we've got the big target below. If we do get below that 71.75, I don't think we're going to hold it this time. In fact, I'm going to change that to make it a trade area because it is a very key area for me. I'd be looking for that move down into the 63.25, 59.25 area, with 59.25 being my main target, main magnet below, because that is the microcomposite VPOC, okay, from the whole move up from the breakout of the balance that we were in up until May 26, and then we broke out, and then we rotated in this area, and we went from VPOC that started down here in the 44 range up to the 59.50 range, and did shift at one point in time up to what was 71.25 and then down to 67.25, and these are the two adjusted spots. 59.25 is the one that I'm looking at if we can't hold above the 71.25 area. Take a quick look at how that looks and sets up on the Renko with Keltner. Okay, we are way above. Look at where that, I kind of love when these things line up the way they do. Our center Keltner line is 96.75 right now. And I'll tell you, if we come down and test it, it's going to be 96. A move to the upper Keltner line is a test of 2002.25. So that will go up and basically test our overnight high at 2002.75. If we do break below the 96 and move down to the lower Keltner line, will take us down to 91.25. But by the time we get there, I bet you it's going to be, 92. to 93. So that looks very good. What time is it? 9:12. Let's take a look at the Russell. The Russell, we came down and we were looking for that move down to the microcomposite VPOC down at 1134.30. That was our main hypothesis from Tuesday. We came down, we missed it by one tick, and then we rotated back up and tested Monday's breakout range high at 54.50. We actually hit 55 before rotating back to the value they tried to hold after making the that swing high of the fractal high at 1156.60, and we're currently trading just inside the 6-day value area of the microcomposite. The value area low is this 5180, and we're trading right around the CHVN here at 5290. So I'd be watching that 5180, and if we break below that 5180, look for a move down back towards the 48, 49 area, where that former microcomposite VPOC was, and then if we test the lower side of the longer term balance of the microcomposite that runs from the 0818 through to yesterday, that takes us down to 46. Anything below 46, I want you watching and targeting this 4130 again, and coming back inside of this balance and seeing if the accepted value that we found in the last 3 days holds. If it doesn't hold, look for that break of 4060, and then everything's got to be shifted down to testing the value area low at 3790, but I doubt that that's going to hold. I'd be looking for a move back down into that 34 area again, and coming down and probably even testing the other side of the balance around it at 3180. Below 3180, we have that area I've been talking about that has undetermined fair value and pretty blunt area of the profile. It's been improperly auctioned, and I'm expecting chop in this area between the 3180 and 2170. Anything below 21.7, you've got to be looking at a move back down into the composite VPOC, and that 11.11.16, with the first target being that 11.13.90. That takes us down to test the value area low from the balance that we broke out of down here, and testing the microcomposite VPOC of where we accepted value just inside of that value area high. I hope it's not confusing, but to make it real simple, anything below 2170, short your heart out, going down towards that 11.13.90, 11.11.60, because that will become a big magnet. The 11.11.16 is the composite VPOC going back, or the most traded price going back all the way to October the 10th, 2013. If we can hold inside of this 5180, look for them to come up and test that range high at 55 of the 3-day microcomposite, but more importantly, test this CLVN at 5640. Above 5640, we've got great targets. 5780 is the VPOC from the 6-day, and it's the same situation. See how we had the same situation here. Down here is when they came down and they were testing that value area low and they were battling it, they accepted price right inside of value before they made the move up. You've got the same scenario here where they were battling this value area low and created a microcomposite VPOC. So if we get above this 56, this is going to be a very strong move, in my opinion, up into the 58, and then if we can break above that area, then back into balance a longer term, because we're inside of that, we're holding inside of value on the longer term microcomposite. I'd be looking for a rotation up to this 1160.80. We just need to hold this value low at 52 area and get above this 56, and I think you got a real nice trade up into the 1160, 1163 area. There's lots of nice targets in this area. And then if we break out a 67, above 67, then we test the other side of balance and the value area high up in the 1170, 1172 area. And I think we get above there, then we're going to break above this fractal high and this interim range high at 1179 and go test the 1200s again. That's my opinion. Doesn't mean it's going to happen today. Take a quick look at gold. By the way, my hypothesis is all written and put in the room for the rest. I just wanted to do a quick overview there. I want to draw a profile in here. We had further weakness in gold. We've broken outside of the value area. We're accepting value in around that 37 area. Actually, I didn't get this right. Sorry, it was a 34, I believe, that I was watching. Yeah, it was. This is a 34, 35. We've broken out of this 4-day area, and we're trading right now down at 1121. We've tested that 1218 again. I think we're going to come down to the 1210, but the big destination below is this 1206.40. I think if we get a run up on the ES and the other indices, that we could see some further weakness. I'm going to probably be moving my stop down again. I had moved my stop down. I was putting up at 44.80. I'm now going to move it down even further now that we've got this move, because I want to lock in some profit. So I'm going to be moving my stop just above the CLVN that we've got at 1226.50, and I'm going to put it up at 1228.20. And if we get taken out, we get taken out. But we had from that 2 Sundays ago when we had that FUBAR Mr. Sneaky Tech gap that we took the short on. This has been a great trade, and I'm not considering this a swing trade, because I don't think that that the move in gold is going to go much below that 1206 area. But I'll take advantage of it, and then I'll look for an area to get long and start building a swing position long in gold again. I just have to wait for this new top to be put in the indices. Anyway, that's going to complete the pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.